Everybody, today is Monday, May 1st. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure there. I got back into a little bit of pins on Friday, which I'm still trading. What a little bit of this chag here after hours, which looks terrible. I probably shouldn't be in it, and I'm probably going to have to head out soon. Yeah, jumping over to the market here. So the expectations we established in the morning meeting today was basically for rest, and pretty much what we got was rest. So I think our expectations were perfectly met. We discussed for today coming into this with like a less is more approach. And that was the right idea. So if you followed the less is more approach, you didn't push things today. You didn't get hurt in what turned out to just be a really choppy market. You can see here the SPYs pretty much doing nothing all day, but they were really trying to test that 4,200. It was just going to be hard to break 4,200 in the SPX today, given that it's kind of a day 3. And it was a pretty big 2-day move into this point. Though we were not that extended on like our short-term tactical. Q's basically the same thing. The issue, if there was an issue, is this IWM. The Russell today was extremely strong off the open. As a matter of fact, this morning I thought that the market was giving us the most ideal thing that you could ask for if you're a bull. The Q's, which have really led this market up, took a immediate rest and were relatively weak, which is again is exactly what we were kind of calling for as a team. Sorry, just watching this cheg here. This massive seller is just stepping down. Just been a refreshing seller stepping all the way down for the last like $1 plus in this cheg. It's just been really gross on that kind of guidance number that they're providing. Yeah, so anyway, this morning anyway, it was looking like the most ideal situation that you could ask for if you're a bull. What we were talking about in the morning meeting was kind of rest, especially for the SPYs. 2 big days coming into 4,200. The Qs, 2 big days in a row as well, and potentially beginning to break out of the bull flag that they've been involved in on the daily chart. But it's the leadership has been really narrow. So this morning when we're seeing the Qs actually show relative weakness, but the IWM trying to catch up, that is great. It's exactly what you need. I struggled this morning when I was looking at the IWM to see where the relative strength was actually coming from, because banks were kind of weak, energy was kind of weak. I guess biotech, the smaller biotech companies led by the XBI, were extremely strong again, which is one of the things that we were looking for today. I forget which one of you brought that up in the morning meeting, but it was a solid call looking for this XBI, and we talked about potential continuation above $81. But I struggled this morning to really figure out what was creating the IWM strength, which made me a little bit nervous. But all the same, the strength was there. So SPYs resting in an important area on the daily chart, Qs resting in an important area on the daily chart, and the IWM giving relative strength and giving us some mean reversion. It's like the most ultimate thing that you get for the bulls. I still really did not want to push things today, so I followed my game plan, which was to be, passive with my trading, to sit on my hands a little bit more, to try to take it easy. But finally that seller lifted. But that IWM was really trying to rock and roll. Sorry, need a second here again. There's a big pop on that break of that seller, which is exactly what I was looking for. If that seller could break down there, they're applying so much pressure on it. See if the seller comes back or not. All right, cool. Yeah, and then the IWM just really weakened out, which was kind of the flip side of things. And when that Russell weakened out, I don't know, it really just confirmed that there was nothing to do. I did not want this IWM losing those key numbers, though, that we got back above. Whoops. We discussed in the morning meeting today that one of the key spots that we've been paying attention to for this market is the spot in which the market broke down from, which happened last Tuesday. So with very narrow leadership, jeez, this thing is trading so crazy. Sorry, sometimes it's tough to do these meetings and trade at the same time. I really should not have gotten into this so that I wouldn't be for no other reason than I wouldn't have been distracted. One of the big things that bears have been pointing to has been the narrow leadership, right? And there's all these statistics out that you can look at where if you take away the strength of like Microsoft, Meta, Apple, then you've got no performance this entire year on the S&P. We were looking at some statistics pre-market this morning that showed the spread between like the equal weighted S&P and the market cap weighted S&P is, you know, somewhere around the third largest it's been going back to 1990. And you can see that in the Qs versus when you look at the IWM. So the fact that the IWM was given that strength early on in the day, once again, it's just like exactly what you wanted to see from this market. And that ended up kind of failing. So you can see here that the Qs were able to fully negate last Tuesday's breakdown candle. That makes it a false breakdown that's very bullish. The SPYs were able to fully negate last Tuesday's breakdown candle. Same exact thing, false breakdown that's very bullish. The IWM has not been able to do it. So today, this IWM getting above 176 and reclaiming that level on the intraday with that relative strength, that's huge for bulls. They just weren't able to maintain it, and that weakness kind of came in. So it's really why I wanted to see where we would close. This tail's too big on the IWM. It's really not what you want to see. You needed to close above 176. Ideally, I would settle, like I was saying, for a close above 175.50. I really don't like this upside tail. So a little bit of a warning signal, but again, it was a day 3 into big resistance for the S&P, so some more rest makes sense. I just want to see, yeah, the RSP was also able to fully negate Tuesday's breakdown candle. That's what I wanted to see. And the QQQE, the equal weighted, has barely kind of gotten above it too. So just a really important technical thing to, you know, pay attention to for the market. And again, at the end of the day, we got the rest that we were looking for. Was still a couple decent trades. I mean, unfortunately, I was just like a Monday morning mess today, and I accidentally canceled all my orders right after the market opened, and I missed this NVIDIA breakout, which on the top of my list today was to look for NVIDIA through 280. If anybody caught that, I mean, this was just the most easy bread and butter breakout that you ever could have asked for. Wasn't even really, you know, I guess there was a decent amount of risk. You probably had to give it like $2.20, give it down to lows if you bought through that 180. But it was just perfect volume confirmation, daily chart breakout, relative strength, momentum. Just probably a little bit too much risk for some people off that opening trade. But and the thing that I didn't love about it was that I just didn't trust the market. So it's probably not one that I would have taken maximum risk or anything like that. But if you could have gotten involved in this, this was most definitely the trade of the day. And everything else I thought was, you know, pretty relatively boring. So that's all I got for you guys today. I am happy to take a look at any questions that you guys have or anything at all. Coinbase just got downgraded after hours. I don't have MGM numbers. I don't know if Pat has them. Kyle's got a couple of questions for me. Oh, NCLH. Oh, that was another really good one. And this was not on my radar, and one of you guys brought this up in the morning meeting. So that was a great call through this 1350 is what we discussed. Is kind of a little bit of a level. What did it look like off the open? Wow, it held 1350 to the penny off that first 5-minute bar and broke on the second one. That's like pretty nice, actually. So let me read your question. So with my NCLH trade today, I was in at 9:55 at the shooter break. Okay. Then I used 2 stops for the remainder of my position. So you got your risk cover at 10:30, then I used 2 stops for the remainder of my position. One at the... Sorry, just give me 1 second here again. One at the 10:05 low. Okay. And one at the 10:30 low. Okay. I'm fine with both of those. At the time, I considered this 10:30 bar an ignition bar. Yeah, okay. I don't consider an ignition bar unless it's a daily chart breakout, but I would kind of call it a candle of note, just because you've got the way that the volume kind of came in on like a little bit of an intraday breakout of this wedge pattern. So I think it's okay. I would never really want to use that as my whole stop, but if you want to use it for some that you're trying to keep tight, I'm fine with it. Was the stop too tight? I would argue that the stop was probably too tight if that was everything. But if you're using 2 stops like you're talking about, if you're using one tighter that you don't mind getting stopped out of because you want to make sure that you're able to, you know, kind of properly cover your risk, or, you know, put some extra money in your pocket or whatever it is, and then use that other stop that's a little bit wider, which is probably the more appropriate stop, I'm totally fine with that. I'm looking back at the 15-minute. Looks like I got stopped out of this piece of the new 15-minute higher low that was created. Well, I mean, that's exactly what you're risking with a higher level stop loss that's on a 5-minute chart as you go into midday trading. You should almost, if you're trailing really tight on a 5-minute chart, you should really expect to get stopped out. And if you don't, you're probably lucky. So that's why I like the idea of breaking up your stops, and one that's a little bit looser, maybe based on a higher time frame, like a 15-minute chart, and one that you're keeping a little bit tighter. So I think that's fine. With NVIDIA this morning, when it initially broke at 280, I did not see it. Yeah, me neither. I was distracted. Then when I put it on my screen, it had pulled back below 280. Volume was coming in nicely, so it would have been okay to still try it through, though it already broke, or at that time is probability of follow through less likely, not worth it. So I don't mind it. You definitely will have a little bit of a lower probability of success because the ideal trade would never give you the opportunity to get that stock. The reason why I don't mind it though is because you got a decent degree of extension on that 280 when it's actually happening at that time. So there's going to probably be a bunch of volatility around that 280. So again, more ideally, your ideal momentum trade, it breaks through 280 and it never looks back and it just gives you continuation. But a little bit more nuanced when you've got you know, $2.50 of extension on your 5-minute chart from the 80 MA there, it's much more likely that it's going to be kind of sloppy and loose in that area. And if that's the case, then you might actually be able to get an opportunity to get a little bit of a better price on some stock if you actually did miss it through the 280. That's a lot of the times when you got that degree of extension. If I was really watching it at the appropriate time, I'll take a little bit of stock long through 280, but I don't take too much because I recognize the extension and I recognize that I might actually be able to build in, and I might even need to build in at a little bit of a lower average price if it pulls back on me, if I'm giving it $2.50 worth of room. So again, ideally you have some at 280 or you have at least a piece at 280 so that if it's given that perfect trade and it just goes, you're getting paid for it. But, you know, given the degree of extension, if it's still within that first 5-minute bar and it's just a little bit loose on that break of that 280 and get some stock, I'm fine with that also. So I hope that helps. What else, guys? From Sebastian and YouTube, what do you think about buying the inside day break on Morgan Stanley with JP Morgan gap up? I thought the banks could be in play, and I like the Morgan Stanley daily. Yeah, I got some of this Bank of America that I'm in. The banks ended up disappointing. Wow, Morgan Stanley was super weak. I was disappointed with this Bank of America, and this thing closed on lows, and that's the one I'm involved in. I'm looking at Morgan Stanley. This looks atrocious how it traded. Super relatively weak even compared to the other financials, but from an idea concept, obviously we can't look at it in hindsight. I like it, you know, if you think that JP Morgan coming in the way that it did is you know, gonna be giving some support to these banks overall and take away some of the fears of contagion. I like the thought process. And the Google Insight Day we had on our list today, it just wasn't able to get follow through, which I wasn't surprised about with the market. What are my thoughts on SoFi? So SoFi is my big surprise in the day, and it kind of ruined my day, to be honest. Like I had a pretty decent day outside of the fact that this SoFi was just a disaster, and I don't get it. I really don't get it. I need to take a little bit of a closer look at the report, but from what I've seen so far, it looks like the report was really solid. I don't know why this stock just can't seem to get out of its own way. The growth numbers that this thing is doing are incredible. They're consistently making it through every kind of bad situation that seems like it's happening. You know, the banking blow up doesn't really seem to be affecting SoFi very much. The growth is very clearly still there. They, you know, increased deposit insurance to $2 million for their depositors. It covers 97% of people. People feel safe. Soon you're going to be getting the student loans that kind of come back online, which is the original core portion of their business. That might be able to wake them up a little bit. And again, the numbers, I didn't consider numbers to be blowout like last quarter. Back at the end of January, they destroyed their numbers. And the stock appropriately gapped up and ripped for 4 days, pulled back a little bit deeper than you wanted it to, and then the banking crisis happened, which just kind of ruined the entire move. I can't point to why SoFi sold the way it did at all. Okay, fine. You know, you want to pull back and fill the gap. You know, maybe they opened it up too high. I was selling stock pre-market at like 670 something, I think. So again, you know, you wanna pull back off that big gap up when it's day 3. You want to pull back. You want to fill your gap. You want to pull back to 620. Fine. Even if there's some real profit coming in, you get a pullback to the breakout level of $6 that broke out at the end of last week. Even that is kind of understandable to me, just off of profit taking or whatever. But selling down to 540 something and closing on lows on this volume, I really don't understand it. So, you know, I thought I was super patient. I waited till it got down to $6. I waited till it looked like it was trying to hold off $6. I took some trades in that area, and those trades completely failed. And I was pretty aggressive at that point. Like I was patient, and then I'm like, all right, I'm looking at the way they're selling this thing off into $6. Just a huge sell here. I'm like, all right, this thing's got to give an oversold balance, some stabilization off the $6 area. It paused for 10 minutes and then gave continuation, and with that inside 5 and down there, and that kind of just told you that this thing was shot. So it was just completely brutal. I can't point to the reason behind it. I thought that the earnings report was just fine, but like I said, coming into earnings season, you know, for people who are newer in the trading business, you will get consistently every single quarter of your entire trading career, you will get the company that, you know, beats on all of its numbers and then sells off, or the company that misses on all of its numbers and then gets bid up, and you struggle to really point to the reason behind why. And it just goes to show you that the most important thing is always just going to be the price action itself. Focus on the price action. And, yeah, that's it. Anybody else have anything for today? Otherwise, I'm happy to wrap it up a little early. It's Monday. It was kind of a slow day today. All right, cool. So let's wrap it up there. I hope everybody was conservative today because I think that was the right move. There was a few good trades out there if you were patient. A lot of other stuff was very choppy, which is what we expected. So, what's up, Joel? None anymore. I don't break stuff anymore. So I'll end it at that point. Have a great night, everybody. See you all tomorrow.